Welcome back, traders. I got some comments on my videos about the volume is too low, so hopefully it will be fixed now. The problem is when I watch them on my devices, I have no problems with the low volume, so please put a comment if it's better now or if it's still a problem. And also some importance here, I am not the creator of these concepts. All the credits to ICT learning us this awesome model. So today's topic, how to backtest ICT 2022 mentorship model. Remember, backtesting doesn't necessarily need to include only where the best trades come from. Backtesting is a tool to just purely go through price data and train your eye to search what to look for and implement the tools from the model. And you're gonna see how much actually goes on in the price when you take a deep look at it. The key here is to learn exactly what to look for, and I think actually that's one of the most important parts to success in price reading. And I'm gonna break down some price data here to tell you exactly what I preferably look for, how I'm thinking when I'm reading price, and hopefully clear up some things. So no executions in this video, just some pure price reading here, and maybe you can pick up some nuggets to take with you when you're reading price by yourself. What I'm seeking for when I'm backtest is the identifications of the market maker models and the reversals, aka the market structure shift. Also, one of the most important parts to me is to identify where is the dead money. And when I say dead money, I mean those areas that look like an easy target for price. Whenever I have a setup formed and I refer to the reversal part, do I have a clear area to exit our position? Basically what I'm saying here is, are we in a buy or a sell model? So how do we know if we are in a buy or a sell model? Well, step number one is to look for where price came from prior to it attacked the liquidity or made a reversal. Did it came from an area of big formations or an area of some pure clean highs or lows? And I'm actually gonna show you here in price what I mean by that. So looking at Australian dollar here, US dollar, 3-minute chart, I think this is the price data from Wednesday last week. And why the 3-minute? Well, I don't care so much of which time frame I use on the lower time frames. So if I look at the 1, 2, 3, 4, 5 or 6 minutes, I just pick the time frame that show me the most cleanest price action. So we know that we seek for areas where price could potentially make reversals, we seek for areas of clean liquidity, we seek for imbalances, and we seek for market maker models. We're having price coming down here from the Asian session, trading lower, so basically creating lower highs here. And whenever price is creating an obvious high, I just draw some lines here or a line to mark off the level. And we also have some imbalance here, so this could be an area to just mark off, because we know that price is likely to come back to these areas. During the beginning of the London session here, we have some easy clean highs created here. So this area here is pretty interesting because we have an area of imbalance, we have some clean highs in here. So we know that price is likely to draw up into these areas. So when we leave this area right here, in the middle stage of the London session here, we have price creating a low and a low again. And also remember that in bearish markets, up close candles should support price from going higher. In this case down here, it fails to do that. So we have a market structure here, and I think that if you jump to the 1 or 2 minute chart, you have a little bit more cleaner market structure here, shift here. We also have a fair value gap creator. So we have the setup, we have the model form down here. And remember, we also wanna identify the cleans areas of liquidity prior to we jump into a trade. So if we didn't have this fair value gap up here or this equal low highs up here, I should not be super excited by jumping into this trade. Let's say we have, peak formations. And when I say peak formations, I mean areas like this. I don't see an area like this as an easy target, like for example an area of here. And this to me is a dead area of money. This to me a little bit of a more resistance area. Anyway, we have a market structure shift here, price creating a fair value gap, trading down into the fair value gap. So if you miss this opportunity down here, you can use this fair value gap right here to be long. And what do we target? Well, if you're familiar with market maker models, you can attack these highs right here, because here's to me the market maker buy model finishes. So I don't say every example here is a tradable scenario. I just show off here how I go through all price data, and this helps me to train my eyes to identify market maker models and reversals, and why setups failed. And this could be a good area of learning why it failed to go lower here, because to me price is always gonna move around in the market maker models. I see price just moving back and forth in buy and sell models. So if this reversal up above this session high here, if you see this as a reversal, remember we want a clean area to exit our position. In this case we want a clean area down here to buy back or short. So what I'm saying, if we are sellers up here, what we are saying is that we should be in the smart money reversal part of a market maker sell model. So if we had a different scenario here, let's say we had an area of clean highs down here, or and consolidation, yes, this could be a good scenario of taking a sell to attack the liquidity here. But what you have here, you have like a peak formation, you have higher lows here. So this price leg here is more of a high resistance liquidity. It's not too easy, right? You can see it. Compare this liquidity here in this area here to, for example, this area right here. This is an area to me at least, that it's a little bit more easy target, because it's just clean and easy. Here you can also implement that the opposite should support price. Trading above these highs here, we have a fair value gap created, we have this up close candle here formed, and remember, if price is going to be bearish, up close candles should support price. So this here this up close candle here, if this one to continue lower, we should see a continuation here, but it fails to do that. Instead, we have a market structure shift here. Again, we have a bullish market structure shift, and also notice what we left down here. We have some equal lows down here. So in my previous videos, I mentioned that whenever price is leaving a clean area of liquidity, I see that as a start of a market maker model. So if I was watching this price live here, I could potentially see this as a start of a market maker model, and after I have identified that, I look for areas where it could potentially make reversals. So my first area is right here. We have the high here, and how does price behavior when it attacks this high here? Well, you obviously have a hard breakthrough here, so it breaks out, pulls back. You have no shift here, right? You just have a breakout, it pull back, and it continues higher. Okay, look for the next liquidity pool to the left. We have this high from the late stages of the Asian session, or the early beginning of the London. And here is an area where it becomes more interesting. Why? We have price breaking out, it pulls back. So whenever price is breaking out on all highs or all lows, it can basically just do thing, and I talked a lot about that in my previous videos. It can break out, pull back and continue, or it can break out, pull back and reversal. So what I want to see is a reversal pattern, and what do we have here? We have price breaking out, it pulls back, and if this not was a false break, this swing formed here should support price, or at least this one from going lower. But instead we have a sell-off, so we have a market structure shift here. Once again, we have a bearish market structure shift, we have fair value gaps created. So for example, if we had a retracement up into the fair value gap here, basically saying into a premium, this is a sell for me to attack the original consolidation where price came from. So that's what I'm meaning with you want to have a clear area of selling or buyback your position. Anyway, we have price trading down into these clean levels down here, so we know that the sell model is completed. And when price is trading down below these lows down here, we want to analyze how price is moving. Does it show its willingness to continue lower, or does it break through higher and made a reversal? In this case, price is consolidating here. So if this was a breakout, pullback, continuation, I will at least see this swing formed here to support price from going higher. So this to me is an intermediate term high. We have a fair value gap here, and this high rebalancing the fair value gap, and price just trading right through it, comes down into the fair value gap. So we have a shift, we have a fair value gap created. This could be a potential setup for you, not to me, because we're not trading down into a discount. So remember also, or notice also what we have left down here after taking out this liquidity here. We have another area of equal lows and a consolidation. So this could be a potential new sell model started. So whenever price is leaving a consolidation, I look for areas where it can make reversals. We obviously have this high here, which is the high of the day. But we also have this high right here, which becomes really interesting because we have the fair value gap here that it's open to me. So when price is trailing up into this peak formation here and above this high here, does it show its willingness to continue higher, or does it show its willingness to make a reversal? We have an intermediate term load form here. We have this fair value gap, this swing formed. So price is breaking out, it pulls back. So remember, it can do two things. It can break out, pull back and continue. It can break out, pull back or reversal. In this case, this swing should support price from going lower, but it fails to support. Instead, we have a breakdown, we have displacement, we have a fair value gap created. I'm gonna make this white to represent the fair value gap. Yeah, you can see it. So this is a playbook or a textbook setup to me, because we have a lot of confirmations. We have a clean area of liquidity down here. We have price trading up into buy side liquidity here, fair value gap here. We have a breakdown, so we have a shift, so we have a low, high, lower low. We have a bearish break here, we have a fair value gap, we have price trading up into a premium. So optimal trade entry, fair value gap, bearish breaker. 3 combinations of confirmation that to take a sell. This is a textbook setup to me to attack this low down here. So one price trades below these lows here. I'm not the biggest fan of leaving runners. Whenever I see a buy or a sell model that is finished, I'm just collapsing the trade. But that's up to you how you wanna manage your setups. So we're trading down below this consolidation here, and we finish the sell model. Notice also what we left up here when we made the smart money reversal of the sell model. We have a clean area of liquidity here again. You can see, scroll out a little bit. Equal highs up here. So trading down below this sell side pool here, we have price creating a lower low and trades right through it. So we have what? High, low, high, high, bearish breaker, or sorry, a bullish breaker with a fair value gap. So here is a potential setup formed once again. If price was trading down into this fair value gap, yeah, this is a textbook setup to me again, because 1, we have taken out liquidity, 2, displacement higher, 3, fair value gap created, bullish breaker, and we have this area up here to sell back our long. So the buy model completes right here. I don't say that all these setups I showed in here is tradable. I'm just saying that if you seek enough, you can find a lot of setups intraday. That's why I prefer to work with the intraday charts. And this is basically just how I going through old price data, because this is gonna help me to train my eyes to learn what to look for. And not every day gonna look like this. From experience, some days price is just gonna be choppy back and forth and not super clean. Some days it's just gonna be trending higher or lower. Strongly trending days doesn't fit my type of trading too much. I prefer more this type of price action, because to me this is a little bit more easy to read, and it's all about what you want to see. It's all about what you prefer, and I think that's one of the most key parts. It's really learn what you want to see in price, really learn what to look for, and how does a textbook setup look for you. I hope this video was helpful. As I said, this is just how I go through some old price data, and I think it was all for today. And yeah, I hope you're having a great weekend, and I see you next time.